From the floor of the CME Group, this is Danny Riley with today's Cash Close. And the name of this video, S&P Dumper and VIX Jumper. The high of the day in the S&P came in at 2037 even early in the morning. The low came in at 2013 even mid-morning. And last, we're 2025.40. We're down in the dumpers, down 28 handles. Total volume, 1.8 million minis trade and 4.1 thousand big S&Ps trade in the bid. MOC, the MIM kind of had this one again. It came out showing to buy. It was showing 247 million to buy exactly at the 245 cash close, and the actual MOC came up by 377 million. Tomorrow is the day 2 of the FOMC meeting and the announcement, the MBA Purchase Applications, the EIA Petroleum Status Report, a 7-year note auction, and we've got earnings from B of A, Facebook, Qualcomm, and WYNN. I got past that part. Now, today's trade is kind of exactly what I've kind of been talking about. I don't want to be overly committed to one direction or the other. And I think if you've been following me, you know that I generally have an opinion. But you know what? The year has started out kind of in a funky manner. We came out of the gate with 3 big down days, 2 big up days, five big down days, 4 big up days, and then we've been down, up and down again today. So really, at the end of the day, it's somewhat directionless, but also I think that the overall price action kind of speaks for itself. This jump in volatility is kind of scary. I don't know. Maybe I'm wrong. Now, today's weakness could be accounted to a combination of disappointing earnings. Microsoft was down, Caterpillar was down. But also, I think that there's a little problem here brewing between the strong dollar and the multinationals. There's going to be a problem there. And we kind of saw a little bit of shift into the small cap stocks this week. I think the small caps were up 2.5% at one point this week, with the S&P up 0.7%, not including today's losses. But let's face it, the S&P is going into the 6th year of a bull market, and with the S&P, with the weighting in the S&P and all these oil companies being beat down, it's going to be hard to keep up with some of these earnings like we've seen over the last few years. And I think what we're seeing is it's being adjusted, and we're kind of seeing some of this being adjusted into the VIX. That's why things move around so much. That's why things become so fluid. And you know what? I don't want to put my hand down in either direction right now. And the last part of this would be that, one, I think the mutual funds may come back, as crazy as this sounds, and start to mark up some stocks at the end of the month. But I also think as we go into February that we may see a big increase in volatility. I'm going to leave it like that, you guys. The markets have been all over the place, and that's what we live for. And I'll see you guys on the opening print.